You are listening to Invest in the Future by Future Africa. Future Africa is a platform connecting mission driven innovators and investors looking to turn Africa's most difficult challenges into global business opportunities. Please note that the content of this podcast is not to be regarded as investment advice.
Fantastic, fantastic, because it's really supposed to be a conversation. It's really a fireside chat. So thank you, Binjo, for always hosting this. And thank you, Michael, for graciously accepting to come. We feel like we landed a big fish. So thank you so much. Yeah, well, I guess just like Binjo said, just for the audience, this is Invest in the Future. Normally, Binjo and Adenike are our hosts, and Ore as well. It's a podcast show. So forgive me, everything you see here is going to be recorded. And we just talk about investing in the future, especially in places like Africa, which are the future, where a lot of the future is being built. Yeah, I'm just gonna, talk through a bunch of questions and hopefully we can get some answers. And then I think in the last 15 minutes, we're going to open it up to questions from literally participants from all over the world. We've got folks from France, from tons of folks from Uganda. That's like our favorite place now. As you can imagine, Lagos, and everywhere else really. So I'm hoping it's going to be a fun session. So, just to get things in gear, I'm not going to do the boring thing and make you repeat your Wikipedia page. but I'd love to hear one thing. I mean, you've built a number of companies, Justin TV, SocialCam, with Y Combinator, and outside Y Combinator, you funded a lot of companies, including ours. And we're super grateful to you for that. I would love to hear about, one, your favorite investor, and two, your favorite investment. And what made them that?
I'm going to have horrible answers to these first two questions. I apologize. Over 2,000 companies have done YC since I've gotten here. And I'm currently in my 17th batch. And so it's basically impossible to choose my favorite investment. I don't actually really think about things that way. Does a university or a professor really have a favorite student? I don't know.
Yeah, but you have like two or three who made an impression. How about that? Let me give you some wiggle room.
It's hard. That's too hard. I would say in terms of my favorite investor, it's YC. I think that as a former founder who's pitched a lot of investors and gotten a lot of no's, I always appreciated that YC had a different process. And I've always felt like innovating the process by which founders can get money is something that more and more investors should do. So, I love that with YC, you don't need to have connections. You can just fill out an application. I love that you don't need to write a deck. I love that you can be technical. You don't have to go to business school. I love that you can be just starting or you can be years in. And I think probably the most important thing that I love about YC is that we rarely take a thesis or point of view about an industry. Because of our model allows us to invest in so many companies, we can be experimental. And to be honest, all of our investing in Africa started with the idea, maybe we can get these great founders some money. And I think that if we had to have a stronger thesis than that in the beginning, it would have been a lot harder to get started. And so I think probably that's the thing I like about YC the most, is that if you see a talented founder, your default thought is, screw it, let's invest in them and let's see what happens. And you don't try to be too smart about who's going to win and who can raise money and what's going to happen. Because, my company started with my co-founder, Justin, having a camera on the top of his head, broadcasting his life 24/7, right? And so there are a lot of investors who were too smart to invest in us, and they, didn't make a lot of money. And so I really like the YC doesn't follow that path.
Amazing, amazing. Well, there you go. Your favorite investor is YC, and I'd argue my favorite investor is YC too. I want to dig into what you just said about your thesis on investing in Africa. So I think the year was 2017, right? The first time you came to Lagos. What was going through your head on that visit? And did you imagine that YC would have had the impact that it did on the Nigerian ecosystem, but more broadly on the Africa tech ecosystem? And what has been the most interesting observation on that journey?
So one, I was extremely excited to go. We had already funded a couple of companies in Nigeria. And I had already visited South Africa on a previous trip, and honestly was a little bit disappointed by, I don't know, the startup scene there. I learned a lot later how much smaller South Africa is, and I don't think I understood it at the time. And so, after visiting South Africa and a couple other countries in Southern Africa, and then after funding some founders from Nigeria, they kept on telling me, like, you don't understand, like, Nigeria is like the center of this universe. You have to come, you have to come. And so, when I came first, it was great. I met so many founders, like, so quickly. And it became so obvious that, one, they knew YC. I had founders quoting PG essays, and they knew all about YC. Two, they were just as smart, just as talented as any founder I've met anywhere else in the world. And three, it became obvious that something was happening in Nigeria. And what's interesting was that I didn't try to pretend to understand what that was. Meaning, I spent 10 days in Lagos and Abuja. So I didn't want to think of myself as anything close to an expert. But I learned enough to know, screw it, let's start funding more of these founders. And I think they're going to help change this country, and then change the region, and then change the continent, and then change the world. And I feel like YC should get almost no credit, because YC doesn't change anything. Like, the founders change stuff. We help a little bit on the side, but if any investor were to take credit for Justin TV or Twitch, as co-founders, we'd be very confused.
But I hear you completely. And by the way, I didn't mean it in that respect.
Yeah.
But definitely, I think you deserve some credit. Maybe not all the credit, but definitely a little bit.
Yeah,
for giving founders that opportunity.
And honestly, I think that, what's been amazing to see, I think everyone looks at the world and in some way assumes it's going to be the same way. Year after year, decade after decade. For some reason, they assume it's going to be the same. And, in all of my travels in Africa, it's been very obvious to me how much the world is changing, and how much being a country that's developing later gives you disadvantages, but also gives you advantages. And being able to see how other countries developed and then choose what to copy and what not to copy, like, is so interesting. And being able to leapfrog, there's so many things in America that are so inefficient and that were built before the software age that are so bad. And being able to leapfrog is just such a cool idea to me. And you know, I saw it with very little examples. You know, the cell phone networks in Nigeria have so much more distribution than the landline networks. And you think about that, and it's like seems so trivial, but not having to dig trenches in the ground and run like copper wires everywhere, right? Massive leap, massively more efficient. And so I just think of so many more of those things are going to happen over the next 25 and 50 years. And it's exciting.
Yeah, no, absolutely exciting. I mean, at the fund, we like to say our model of venture investment is the mobile phone. Because, you know, it's like if you can do those type of returns and create a bigger outcome than that, by all means, that's a deal we'll do in a jiffy. So, so definitely share your line of thought there. What I have a more general question. I mean, this is a conversation that really sticks in my head because I'll be honest, I think at the time I asked you this, I was just telling you I was about to leave Flutterwave. And I said, what will get YC to double its rate of investing in Nigeria? I think that was the question I asked you. And you have such a profound answer, which I'd love to ask you about. And I'd love to dig more into, I think mainly for the benefit of the audience, because I understand how you think about it. And your answer was something along the lines of double Nigeria's GDP, because then more people can afford. And then you went on to fund exactly double, because I tracked it. While our GDP is halved, if you're thinking about it in dollar terms. So help me understand what happened now.
You know,
is this blind faith? Is it? Do you like? Just help me understand.
Yeah, I mean, let's be clear. I wasn't thinking short term. I think what is obvious about Nigeria is that it's a large market with a lot of people. And I think one of the things that I've realized about building companies, so I'll say this first. Being born in America, you take so many things for granted. Like so many things for granted. Being born in a country with 300 million people, being born in a country that all speaks the same language, being born in a country with so many generations going through similar public school systems that culturally it's connected. Being born in a country that's relatively stable from a government perspective, and being a country that's rich. Being in a country where our two biggest borders are allies and our other two biggest borders are oceans, right? There's so many accidents that make America like one of the luckiest places. And so many Americans, including myself, just like take it for granted. And so when I first started kind of thinking hard about investing in international companies, I had to start unpacking like what makes a market able to produce massive companies? And like, why don't you see massive software companies in Italy? Why don't you see massive software companies in Costa Rica? Like, why don't you see these massive companies coming out of these other places? And what I basically started unpacking was that like an economy is the fuel, it's the gas that can power a large company. And what's so tricky is that in a lot of countries, the economy is only big enough to power a company of a certain size. And I think that this isn't talked about enough, right? If you are a founder from, let's say, Costa Rica, you better believe that you have to be thinking outside of your borders if you want to build a massive company, but more importantly, if you want to have a massive impact on a lot of people, because there's just not that many people who live in Costa Rica. And so when I think about Nigeria specifically, but when I think about Sub-Saharan Africa more generally, I think this is a core problem for founders who are looking to raise money, is they have to be able to tell a story about how big of a company they can build. And the base of that story is how big of an economy are they building in, and how many people who are connected to that economy, how many people who are really spending money in that economy are they basing become the base of their potential company. And I think what is encouraging about Sub-Saharan Africa is how much the population is growing, and how much the economy in general is growing, and how much the opportunity is growing. I think that what is tricky is that there are a lot of countries in Sub-Saharan Africa where Western investors will say, if you are pitching me a country solution, I don't see the path to building a big enough company. And so oftentimes, that's the challenge. That's the conversation I have to have with founders from Africa, is like, how are you positioning your company in such a way that it can be big enough to attract Western dollars? Because you are competing with every other company that wants those same dollars.
Yeah.
And I think a lot of founders believe this idea that investors fall in love with them. Investors love their idea, and so they want to give them money. And that's nice. It's a nice thought. I would argue that's maybe 10% of investments. 90% of investments are out of fear. If I put my dollar here and not here, what's the result going to be? Am I going to miss out if I don't put my dollar into you? And it's a lot harder to be fearful if you are pitching an opportunity that looks small.
Yeah, that makes a lot of sense. And if I can just say something, just to add more context, I think a significant shift we've seen, at least in our ecosystem, I would say over the last three to 4 years since I was last a founder, is that, I remember receiving quite a number of angel decks where it's like 200 million people, blah, 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 blah. And shake my head. But I think there's now an awareness that because the biggest challenges in the world, some of the biggest challenges in the world are here, you could build solutions here and scale them globally. Like, there's nothing that stops you from scaling a Nigeria tested solution in the US even, right? Like, like Flutterwave, for example. I was speaking to the CEO of Flutterwave the other day, and he was telling me how he has sales teams in New York. And I'm like, what? What are you doing with sales teams in New York? It's like, well, African Americans want to pay, and they like this product, and they're not typically served in the way they should be. So Flutterwave is in New York. And I'm like, okay. So all of a sudden, I think you're going to have a lot more ambitious African founders. And it also brings to mind a quote by Mark Andreessen in one of his last posts, where he was talking about how the internet has divorced geography from opportunity, right? All of a sudden. And now people can pursue global businesses. And I look at companies like Buycoins that you're invested in, and many other YC companies really blazing the trail in that respect. Even us, like, we don't think about ourselves as a Nigerian company. We're focused on the Africa opportunity, but thinking about our customers as investors from all over the world. So definitely a great point you're making there. I have another question. So this is more or less around the kind of startups that you tend to see. And I think this answer changes every year, because I know when I reviewed YC applications, there's always this wave of mistakes that people make, and you got to update that list of mistakes every year. And we try. I think our last YC guide hasn't been updated since 2019, so we need to update our YC guide. So note to the Future Africa team. But what are the newest mistakes you see founders make, particularly founders from Africa, when they're pitching for funding or telling a story of their company, or particularly applying to YC?
First, I would say that it's not, when we see the mistakes the founders make when they apply to YC, they don't tend to be specific to a geography. Everyone is consuming the same information on the internet now. And so everyone who's in the startup community or wants to be in the startup community is basically consuming the same information and then making the same mistakes. So I think that's the first thing. So what are the biggest mistakes that I'm seeing? First, people seem to forget that software requires technical people to build. And I think that in this day of no code and low code and
you don't believe in no code?
People seem to forget that, like, if you're telling me you're building the next Google and no software developers are involved, that feels like even more of a long shot. So I think that's the first.
I see.
The second thing that I see, people don't understand startup timeframes. I think that a lot of founders get caught up in some trend that's cresting right now. The number of Zoom competitors that applied to YC as soon as COVID. I'm like, you're not going to beat Zoom during COVID. Like, that's not going to, like, you're talking to me about a wave that's crashing right now as opposed to the next wave. That's a big one. Third one is bravery. I think in this age where everyone thinks they're a startup expert, now that startups become far more popular, I see founders being generally less brave. I want to do something that all my friends think is a good idea. And I always find that puzzling because every successful YC company, all of those friends didn't think it was a good idea. A perfect example, Brian from Coinbase, right? Like, Coinbase could barely raise $500,000 on demo day. Like, how much do you guys raise on demo day?
Oh man.
Right?
I think we raised, it was crazy. It was really crazy. I think on demo day, we raised a total of 800K. And thanks to PB, who helped us out. And then I just went through the slug, man, and it was just crazy.
So I think that, like, it's, that always puzzles me. And then the last one is, I think that the rise of crypto and kind of Robin Hood style day trading has convinced people that they can do something to get themselves rich quickly. And some people are convinced that the startup world is how you get rich quickly. And what I want to tell those people is, like, trade crypto, trade stocks, like, go over there. Don't come over to me. Don't come to the startup world, because behind every successful story is far more time than you think and far more scars than you think.
Absolutely.
This shit sucks. Like, this is not fun. Like, it's rewarding, but it is painful. And I think that a lot of times I don't see founders working on problems that they're willing to go through all this pain because they love the problem so much, or working with people where they're willing to go through all this pain because they love the people so much. And so, all those things are global issues for applicants. And what's so crazy to me is that every founder thinks that the solution to making a successful company is money. But here's my problem. 80% of the companies that do YC raise money on demo day. 2% build successful companies. So what the fuck am I supposed to do, right? I can get these companies money. It doesn't seem to be, right? It doesn't seem, to be enough. And so I think every founder has to ask himself, like, it's got to be money plus something else that really makes it.
Absolutely. That makes a difference. No, you're absolutely right. And I've seen that in my own journey. It's building startups is more than eating glass. It's like literally eating glass naked in a cold room.
Yeah. You have to ask yourself, like, why am I doing this? Right? Like, none of your friends are living like this.
No one. And then you end up with a bunch of tax issues, even when you get successful. So, but it's okay. I think until we make Justin TV for startup founders, no one's really going to know the real story.
Crazy.
No, thank you very much for sharing that perspective, because I feel like more people should know. So you've been a very prolific personal investor as well, right? Like, I mean, you invested in Paystack, you invested in a bunch of funds, which have been terrific. I want to understand, and I imagine your process, both as a personal investor and as investing on behalf of YC, is pretty much the same, right? Except maybe some stuff YC doesn't want to do and some stuff you want to do. But I'm trying to understand, like, how do you, what is sometimes the difference, right, between when you invest in companies, right? Like, what are you looking for personally, not YC?
I think this is hard. This is hard. Like, once again, I think you're making me into an investor when, like, I don't. Okay, let me set this up better, right? Okay,
tell me.
My company sold for almost $1 billion. So unless I'm an idiot, I'm not going to run out of money for the rest of my life. So that's the starting point. Two, I've worked at YC, and this is my 17th batch. So unless YC breaks in some fundamental way, a lot more money's coming. So you have to understand how, like, my personal investments are not how I want to make money. So that's the first thing, right? My personal investments are one of the most direct ways I have to try to change people's lives or the world for the better. So more often than not, I see my personal investments, I don't want to say as donations, because that makes it sound like people are, like, not deserving or something, but I see it as, like, leverage.
Yeah.
Right. Like, if I give a fund money, they can use that to go raise more money and then do more awesome things. If I give a founder money, they can use that to go right. And so to me, it's like, it's a tool that I can use to help a founder. That's how I see giving a founder money.
And is this, is this how you approach investments broadly, just like across the board, just, you know?
This is how I invest. Like, I will say this. This is how I approach personal investments. It's so weird because the way I approach YC investments is extremely simple. Is this team technically talented, and can they communicate well? Do they know each other? Are they bullshitting me, or they actually know something about this problem? And do they seem to be working on it, regardless of whether I'm going to invest? Fuck it, give them money. That's how I think about YC. I think about personal investments are like, can I be leverage for this founder or for this fund manager? Can I be leverage? Can they take my money and turn it into 10x more, success or failure, right? Can they take my name and do something with it, right? Can they leverage it? Nowhere in there am I thinking, how do I make personal return?
Amazing.
And it's weird.
And that's amazing.
Work. Like, it seems to work.
I'm like, that's a very powerful way to make personal. I'm not rich enough to adopt it yet, but I would try to, like, put, like, maybe some of my money towards that. But you know, that's like, I mean, it's just powerful because it does tend to work sometimes, right? Like, whether it's success or failure, every investment you make is a win. It doesn't even matter what it is.
Exactly. Right? Because if you gave someone a shot, it's like, look, this tech world gave me more than I could ever imagine. right? And so
Yeah.
in some ways I feel in debt to the whole startup world. And like, if I can give shots to more people, then I'm like paying back the debt.
Amazing stuff. That's an amazing philosophy. So I mean, I'd invest in the best naturally. Invest in the future. We're trying to not invest in the best, but like invest in the future. We're trying to like teach people, because quite a number of our people here are angel investors, like different philosophies of investing. And like I think that's gonna go up on a wall somewhere, which is like, look, I invest to give people shots on goal. And whether they win or they fail, I win. So there you go.
Well, and you know, what I always love about this is like, where's the money going otherwise, right? It's sitting in my bank account. Where's it going to go? Is it going to go to my kids so they can just be rich, spoiled kids? Is it going to go to luxuries that I don't need? Like food that's going to make me unhealthy? Like, where is it going to go? And by the way, it's going to all those places and there's still more money. So like, let's create some leverage for other people with it. And I think that I think that I don't want to claim that I came across this philosophy like I thought it up. I think I started writing some checks and I started seeing the impact, and then I started realizing, oh shit, like this is what the impact is. And you know what's so weird to me sometimes about investing is that I always know an investor who's trying to desperately make money. I can always tell that kind of investor. And here's the reason why. When they're negotiating with the founder and there's a penny left on the table, they want half the penny.
You don't split the difference.
Yeah, and I'm like, just a penny. Like,
leave it alone.
What are you doing?
Yeah.
And when you have the security, when you have the kind of, you know, inner sense to say they are taking the risk.
Yeah.
Give them the freaking penny. Like, come on. And like, I think what a lot of investors don't realize is that founders never forget that shit. Founders never forget when you could fuck them and you don't. They never forget that.
They don't. I can tell you from experience. I can tell you from experience. And there, it's always weird where it shows up as grace, right? It's like,
sometimes people you don't expect.
Yeah. You're like, I see that. You know, it's so funny. I am reflecting on my own angel investing journey and comparing it to yours. And I think that's how that's still the way I am, right? Like I think for me, I look at angel investing as really an opportunity to give people a shot at solving a problem they really care about, right? And the impact of that is then what turns into something that's commercially viable. But even in the times when it didn't work, I think I've had the mindset that we won anyway, right? Because we got a shot at that problem and it didn't work, so we now know better and we've learned something there. Yeah, it's really I think it's actually a pattern among the best angel investors that I've met, right? It's really just that impetus of like money is not the most important thing. But yeah, speaking of that point, I mean, we've had a very long-ranging conversation, and we speak once in every 4 months about new models of venture capital and YC's place in the investment world and in the startup world, right? I would love for you to share what you're comfortable sharing about how YC sees itself, especially given there's this sentiment that YC is crowding out local investors, right? Which is not necessarily true, right? But I mean, I think about YC as doubling my investments. So I happily send my people to YC all the time. But I've heard some sentiments be like, oh, these guys are going to YC for funding, so they're not coming to us. Like, tell me what you think about that and kind of how YC sees local investor participation.
So I don't know the Flutterwave story as well as I know the Paystack story. I remember when we funded Paystack, and Shola had raised some money from some local investors, but there were far more local investors who were on the fence. And I remember thinking to myself, why? I mean, like, we hadn't funded very many companies from Africa at that point. They're in YC. It's the most prestigious startup accelerator in the world. Why not take a shot? Especially because the local investors knew Shola and Ezra way better than we did, right? We looked at an application and did a 10-minute interview, right? So, and then I remember Shola mentioning to me, some of the local investors don't know whether we're going to graduate from YC. And I was like, I don't know what that means. Okay, like, they don't really understand how YC works. Like, there is no really graduate. That's not really how it works. But then on demo day, a lot of local investors did invest, and needless to say that they did well. I love local investors, and I think that one of the things that makes this Silicon Valley ecosystem so great are the angel investors and the small funds. I think that the A16s and Sequoias, they get all the credit, they get all the glory, but the people who are doing all the hard work are the people who are writing 25 and 50K checks and 100K checks. It's the small folks. And in every startup community that we invest in, I want there to be more of them. To be honest, one of the cool things that happens when you invest in a company in a region is you start creating more of them if the company wins out. I think that the tricky thing for a local investor are prices and terms. It always comes back to the same thing, prices and terms. And I think that local investors have to understand that they're not participating in a local community, they're participating in a global community. And they have to understand, especially since COVID, that the startup funding community is global, and founders need to get money to make their businesses work, and they deserve to get the best terms they can get. A good business person should go get the best terms they should get, right? That's how you, even if you remove your customers and other stakeholders, that's doing right by your shareholders.
Yep.
And so I think this is a careful and tricky tension, because I think that a local investor often wants to live by whatever terms are standard in their local market. And I think that YC is now 50% international. So what's becoming extremely clear, right, is that investors in every ecosystem are investing in every other ecosystem. And so if the founders you're funding can potentially have companies that impact the world, investors from around the world are going to want to invest, and you have to compete with them. Now, to me, there's two ways you can compete. One, you'll know the founders first, always. Local investors will always know the founders first. And two, as a result, you have the opportunity to write the first check. And I don't think there's a single company that applies to YC from Africa where we are the first investor they pitched.
I won't let you.
So, to me, it's kind of like, hey, the person who we are going to fund is probably pitching you right now. Are you going to write him a check?
Yeah.
Because if you don't, I might. And if I might, others definitely will.
Yeah, exactly. And that's why we always try to write the first check.
Yes. And we don't mind that. Like, we love that. Like, of course, like, that's great.
Yeah. No, but I mean, that's a very important point you make there, that, what makes sense is really for local investors to focus on writing the first check. And I think in Nigeria, that effect has been pronounced, right? Like, all of a sudden, one summer I was complaining that we had all these big funding rounds, but 1 to 5% of seed money, only 1 to 5% of that money was going to seed. And this year, Like you can literally stand on a corner with a check and someone would just throw you $10,000 just because, in case you get into IC. You know, I did a sub $1.5 million valuation.
You know,
So,
and by the way, like if that was the only impact of YC, I love it. Like if the impact of YC was getting local investors to say, you know what, when we meet smart people, we're going to give them some money, because what else are we going to do with the money? What else are we going to do with it, right? Like buy real estate, go on vacation, like where else is, like, why not give it to a smart, motivated person and let them see if they can make the world a better place?
Devalue it in Naira. No. So
I think it's so important. It's like, it's not obvious to me what hoarding money accomplishes. And you know where I really learned this? Because like I have a lot of friends who were a lot richer than I am, and they're nowhere near as happy. And one of the reasons I realized why is because they're in this rat race to accumulate a larger number in their bank account. And Bill Gates and there are always people who've got a bigger number.
Everything.
Yeah.
Every
and so
day. That can't be your measure.
they're never going to win.
You never win. You never win. Yeah.
Don't play that game.
I mean, never. It's the wrong game to play. It's the wrong way to play. So tell me, what do you think the future? Quite a number of companies. You've seen quite a number of successful companies. You've invested in quite a number of them. What do you think the future of startups in Africa is?
Well, as you've been the kind of beneficiary of, I think that YC historically has disproportionately invested in fintech companies. And I think that the kind of core reason why is that unless you have the ability to accept money for your product, it's really hard to build a business. I think that, you know, that's been a foundation, and fortunately or unfortunately, being able to accept money, it tends to be a local problem. It tends to be something that has to be built locally, that has to integrate with local banks, local government regulations, so on and so forth. So that's a foundational piece, and you know, you've been a big part of building that foundational piece. And let's be clear, that's the exact thing we saw with Stripe, right? Like Stripe in the late 2000s, they were part of building the foundational piece for founders in America to accept money. You can't accept money; it's really hard to provide a service to people. The downside of being a fintech is the local regulation.
Yeah.
The downside of being a fintech is that moving from country to country is so hard. And so as Flutterwave and Paystack and other companies do that hard work, I'm excited to see what products and services will stand on your shoulders, and being able to spread multi-country, multi-city without needing to deal with local regulation, because you know they can accept money wherever their product, they want to sell their product. And so to me, when I look at the next 10 years, it's going to be folks building on top of the fintechs and building either business services or consumer services that couldn't have built before because they couldn't accept payment. And that's what I'm really excited by. And you know, there's one person who I should certainly thank. It's this guy named Oo, who was one of the people who hosted me when I visited Nigeria. And one of the things he told me, it was really funny. I still remember this quote to this day. He said to me, "Look, Michael, when people pitch you Spotify for Africa or YouTube for Africa, that's bullshit. Spotify is Spotify from Africa. YouTube is YouTube for Africa. Like Africa consumes global products." And so what I think is that there are a lot of common problems across the continent that African founders are going to be able to solve, that aren't the problems that American founders have solved, because we don't have those problems. And I think that building on top of payment infrastructure, they're going to be able to spread those solutions way more easily throughout the continent. And so, I think that, the onus is on Flutterwave and Paystack to continue expanding. Watching that competition in my mind has been amazing because I think it drives both companies to do better.
I can tell you for free.
And I'm looking forward to all the founders that are going to build on your guys' shoulders.
Yeah, no, absolutely. And I hope GB's hearing that because he's the one who's going to make it happen. I'm just going to be here funding the founders. Well, I'm gonna now start asking questions from Q&A. Binjo, am I allowed to do that? Yes, I know our time is fast spent. Okay. Sure. So I'm going to ask questions from Q&A. If you have questions, there is a Q&A box. Please feel free to drop your question in there, and then I'll pick a couple. I might not get through everything, to be very honest, but I will try and get through as many as we can. So I'm going to take this question from Mutabazi Joffrey. And it's an interesting question. He's asking, what should African startups copy from the US and Silicon Valley? And what should they not copy from the US and Silicon Valley?
So I can answer this really simply. They should copy two things very clearly. One being software first, and two, being lean, not spending too much money. I think the thing they should not copy is that you should not be copying products that don't solve problems in your life or the people around you's lives. I think that America has, unfortunately, there's a large population of startup founders in America who are upper middle class and honestly don't have any problems in their lives. And a lot of their startups get funded. And I see a lot of people around the world looking at them saying, why can't I build this for my country? And I'm like, well, it doesn't solve a problem in America because these people don't even have problems. It's certainly not solving a problem in your country. So you are doing this because it's raising money, not because it can help people. And that is a big failure.
Yeah, that makes a lot of sense. I'm gonna I want to ask a follow-up question, which I see somebody else has asked. I think Ifanyu Koma, which is, Africa, I think unlike the US, has a lot of infrastructure gaps, right? So how feasible? I mean, we're talking about an Africa where the vast majority of people still don't have access to the internet, right? This is a reality, right? So how should startups build software-first companies with that reality that infrastructure gaps do make the internet population a very small one?
I think that in my experience, unfortunately, the startup funding world has limitations. There are problems that the startup funding world is not interested in solving. Does Africa need more roads and bridges? Yes. Unfortunately, if you start a roads and bridges company, for example, the population of global startup investors are not interested in funding it. And a roads and bridges company needs a fuck ton of money. So on one hand, that's a problem. On the other hand, it's an opportunity, right? Because I would argue that innovation comes from limitations, comes from resource constraints. If you ask me to predict the future, it could go something like this. Sub-Saharan Africa continues to evolve on the software side because it's easier to drive money there. The population continues to grow its income levels, and GDP continue to grow, even while infrastructure is lagging. Education continues to improve, and one day we wake up within Africa with a larger tax base, a more educated population, demanding more from its government for the taxes the government's collecting. And then at that time, the government will start making infrastructure investments, only hopefully, knock on wood, it does those investments smarter and more efficiently because it's living in a software-based country.
Yeah, we all contribute money for the bridges. Like, hey, I want 5% of my tax to go to the bridge. Thank you.
And if the government can operate in a software-based country, it'll be far more efficient than the American government, which still operates in a paper-based country.
Yeah.
And so what that'll look like, unfortunately, in the short term, is infrastructure lagging. The things you can do on your smartphone 10xing in 10 years, and maybe the road's not. But I think in the long term, if you increase the wealth of the population, the infrastructure investments will happen.
We'll catch up.
Yeah.
That makes a lot of sense. And I think I agree with that position. I'm going to ask another question. So somebody's asking here, what was disappointing about the startup space in South Africa? And how do you believe we can fix that?
First, a lot of it came from my poor education, right? In America, growing up, South Africa is the thing you're taught about. You're not taught about Nigeria. I didn't learn anything about Nigeria until I went to Yale. And like half my friends were first generation Nigerians. And I was like, what's going on? Like, what's happening here? And Yoruba is like one of the most popular languages being learned in Yale, which blew my mind.
Bawoni.
And so I think a lot of it's not like South Africa did anything wrong. I think it was just kind of like I hadn't educated myself. And you grow up learning about apartheid and Nelson Mandela and so on and so forth, and you just kind of you assume that is the center. I think that's the first thing. I think the second thing was that I didn't understand the size of the economy, and I didn't understand the size of the country, just in terms of population. I only learned that when I got there. And then I think the last thing is I was a little disappointed. I'm going to make a massive overgeneralization now, so I apologize ahead of time. It was more common when I met founders in Nigeria that they would talk about uplifting the entire continent. It was more common when I met founders in South Africa that they were trying to access US or European markets. Like they were kind of ignoring everything north of them until you got to Europe. And I think that has a lot to do with history. I think that has a lot to do with kind of the dominant industries in South Africa. And I'm not blaming those founders, right? I'm just saying that that was surprising to me. And I think in some ways, South Africa is more integrated with the West. And so in some ways, it's not taking advantage of its relative stability to have a bigger impact in Sub-Saharan Africa. And that's kind of what I saw. And hey, look, I'm going to raise my hand and say, I'm not a scholar. I'm not an expert. I could be completely wrong, but, in my visits there and talking to founders in both places, that's kind of what I saw. And by the way,
no, and that makes perfect sense.
I don't know how this has changed, right? I visited both countries in the mid-teens, in the mid-20, 2015, 2016, 2013. And so that's a long time ago now. Things might have changed, but that's what I saw.
It is. Well, I'll tell you, I visit almost every year, and I'll say one thing that has definitely changed is there's a lot more participation of Black founders, and their problems are slightly different than the guys who are looking, township founders have a lot of very interesting problems to solve, right, with technology. And the more I engage with them, the more I'm excited about the South African ecosystem. And we might actually make some investments there. But anyway, my final questions, because I know you're at the top of the hour, I need to let you go. You're a busy man. You've given us an hour. I'm not going to take more of your time. But Africa versus other continents in your emerging market portfolio, 50% of YC's international, tell us, right? Should we go fix up our lives, or are we doing okay? Or
I'll say this. One of the things that surprises me a lot is how founders from so many regions still look at America for product innovation ideas instead of looking at each other. Like, what's fun about YC is I get to put Southeast Asian founders together with Indian founders, with Nigerian founders, with Egyptian founders, and to be completely honest, with Latin American founders. And to be completely honest, they have so much more to teach each other than they have to learn from products in the US. Because they all have this opportunity to do the leap. They all have this opportunity to leap in front of the US. And man, I fear that they copy us and they copy the bad stuff, as opposed to say, how do we leap the US? And so to me, that's my critique of all the founders that we fund. Critique's the wrong word. That's the message I want to send to all the founders we fund in the emerging world. It's like, how can you learn from each other? What are the products that are working in Nigeria that would work in India? What are the products that are working in India that work in Nigeria? Ditto for Indonesia, ditto for Brazil. Like, there's so much commonality there. And I hope that by investing in more and more international founders, we help build those bridges, because I think that they can be really valuable. And I think that, like, it's not enough for emerging markets to meet the West. They have to leapfrog. They got to win their own game. It's not like, don't try to win America's game. Like, we make the rules in our game. We make the rules. You can't beat the You got to beat our game. You got to make a new game. And, I see that, just like simple things like building products mobile first, whereas like America doesn't think that way half the time, and so to me, that's what's so exciting. And to me, that's the challenge of an emerging market founder, is to ignore the company that gets $1 billion valuation in the US and has all the hype and all the flu-fla, and to ignore product innovations from the US a little bit.
Yeah, that's awesome. That's a fantastic note to end this on. If there were ever any pattern words, it is not enough for emerging markets to meet the West. We got to leapfrog. So I hope that's the charge for all the founders on this call. And thank you so much, Michael, for taking the time to be with us for this hour and to talk through investing in the emerging market future. I think this is going to be a favorite for everybody. So thank you.
Thank you for listening to that Invest in the Future episode. Please follow us on social media. Our handle is @AnAfricanFuture on all platforms. You can join Future Africa to co-invest in these innovators who are turning Africa's biggest challenges into global business opportunities by joining the Future Africa Collective, our exclusive community of co-investors. Please find more information and apply at future.africa/collective. Thank you for listening once again.